Good afternoon, everyone. My name is Amy Fiore. I am the director of the Nonprofit Help Desk, which is a program of the JCC of Greater Coney Island, brought to you through very generous support from New York City Council members and anonymous donors. And we are so thrilled to have you all here today, and especially thrilled to have Jessica Adler talk about Money Matters, essential accounting for small nonprofits today. Want to tell you a little bit about the Nonprofit Help Desk so that you know more about us and how we might be able to support your ongoing organizational needs. Jessica, if you don't mind advancing a slide for me.
Yep.
Thank you. So, Nonprofit Help Desk, we are here for you. We offer free live workshops, just like you are visiting today, and an archive of past workshops. So, before anyone asks, are we recording this workshop? We sure are, and it's going to go in our archive of past workshops. You'll always have access to those. We have an active LinkedIn community that we would love for you to join and chat with us and find out more there. And then, most importantly, we have free expert support that I'll tell you about in just a moment, if you don't mind moving on to the next slide. What you'll see here is actually an old list, intentionally old list of workshops that we have coming up. About half of our workshops are focused on discretionary expense funding. We are actually just entering discretionary funding season again for 2026. This is actually for 2027. We have lots and lots of these webinars. They are often they are hosted and co-sponsored by your council members. We do not work for the council, but we give you a lot of information on those. If you are thinking about applying or have already applied or have already been rejected for discretionary funding, even if you want to know if it's just right for you, those are great sessions for you to join. We also have sessions on all sorts of things that nonprofit organizations may find helpful. As you can see here, I'm intentionally showing you an old list. Those are some of our old topics. You can find every single one of those in our video archive. We highly recommend you take a look at them and then also look at what we have coming up for the current schedule at nphd.org. And then on the next slide, this is how we help. We truly are a help desk. So what we recommend is watch some of our workshops, find the topics that are important to you, that are stressing your organization, and then reach out to us as you need more help. We aren't able to come in as a staff member or an interim staff member, but we can do add-on. Once you've watched one of our workshops, once you've delved into a topic and you want to know how that specifically applies to your organization, we can pair you with an expert, legal, promotional, fundraising, etc., so that we can help. What you do once you've watched some of our workshops is go back to nphd.org, fill out a form for the help desk. We want to hear from you, and we want to be able to help if we can. With all that, and without any further ado, I am thrilled to welcome the brilliant Jessica Adler to talk about Money Matters. Jessica, on to you.
Great. Hi, everybody. Thanks for being here today, and thanks for having me. Um, Brief introduction of me. I've been working in nonprofit, mostly in the arts, for the past, oh gosh, I mean, I'm going on 30 years, I guess. And in a variety of roles early on, but for 20 odd years, specifically in finance. I spent a number of years at organizations like New York City Ballet and Manhattan Theater Club. And now, for the past 3.5, going on 4 years, I've been with an organization called Arts FMS. We are a small and growing consulting group. We provide fractional finance services for small arts nonprofits. Arts FMS was started in 2021. When I joined in 2022, I want to say there were about a dozen of us. We now have a staff of about 40, and we have around 75 full service clients. And we are a full service support organization, just in small increments as opposed to full time. So I'm going to walk through our agenda for today and talk about what we're going to cover. We'll spend some time talking through some accounting principles that are key and helpful to ensuring that you're set up for things like grant compliance or giving informational reporting for management and board leadership. I'm going to touch on a couple of different reports, financial reports that are useful, and we'll finish up with Q&A. But please feel free if you have questions as we go. I know that Amy and Nina are going to watch the chat, and we'll pop in if there's anything that is particularly useful to cover while we're going. You don't need an accounting background. This session is intended to be more about looking at the big picture and helping you to maybe start to develop the vocabulary if you feel like you don't have it. Develop a vocabulary about some of these finance principles and accounting principles and feel a little more familiar with them. One thing I didn't mention at the beginning in my introduction is that I also teach. I teach performing arts management graduate students at the beginning of their program, and my goal, I always start off at the beginning of every semester with them saying, like, I don't expect any of them to become finance professionals, but if they're going to be nonprofit leaders, and for them, arts leaders, just helping them have that confidence and vocabulary so that they don't feel intimidated by it. And then before we go into the specifics, why does this matter? I'm sure that a lot of you are wearing many hats, and with financial management being one of them. So understanding basics maybe will help with making that a little less stressful. So our agenda for today, just a few topics, talking about cash versus accrual accounting, talking about restricted funds and how to manage them, understanding a little bit about and tracking cash flow, and then just a very brief touch on QuickBooks and some of what it can help support if you're not already using something like that. So my slides are not in the right order, but okay, there we go. Why it matters. Or my notes are not in the right order, I guess. Supporting better decision making, preventing surprises, all of that. All right, so before we jump in, through the presentation, I'm going to be referring to a couple of the primary financial statements. So I wanted to take a minute to talk about them, just for anybody who maybe isn't as familiar, to just kind of define what they are and what they do, so that when we get to them in more specific context, maybe they make a little more sense. So these are the two first statements that, like, if you opened up an audit, that you would see in the audit. The first one is the statement of financial position, which you might also hear referred to as a balance sheet. It reflects your assets, what you own, your liabilities, what you owe, and then your net assets, which is the difference between the two and what you have available to fund your operation. And this is an example of what it might look like, particularly in an audit. We're going to be coming back to this document for an example later on. And you can see in the assets, things like cash or accounts receivable. In the liabilities, what you owe, accounts payable, and then your net assets at the bottom. The other statement is your statement of activities, which you might also call an income statement or a profit and loss statement. And that's got your income and expenses and the change in net assets from one year to the next. Or you might, your surplus or deficit. The other difference between these two statements, your balance sheet is always going to be at a point in time. So your balance sheet would be as of June 30th. Whereas your statement of activities is going to be for a period of time. It might be for a month. It might be the month of January. It might be the fiscal year from January 1st to December 31st. All depends on what you're looking to report on. And then this is an example of the income statement with at the top, your income, your contributions, maybe you have program earned income, and then at the bottom, all of your expenses. And then the very bottom line is that change in net assets, your surplus or deficit. And like I said, we'll come back to these later to talk a little bit about the restrictions. Okay, so first up, cash versus accrual accounting. Cash accounting is sort of like what we do in our daily life. We record income. I say to my students, and every year as we go on, as I say it, I'm like, it's like when your checkbook. And I'm like, who actually has a checkbook anymore, especially, 25-year-olds. Um, so so recording income when the cash is received, recording expenses when the cash is paid. It's simple and intuitive. It might be good for a very small organization. The issue is that it doesn't necessarily help you plan. It doesn't show what's happening in the future or what income might be committed to you already. So that could prevent you from planning appropriately. Accrual accounting, on the other hand, is you're recording things when they happen. You're recording the income when it's earned. You're recording expenses when they're incurred, regardless of whether the money has come in or you've paid the bill. It's going to give you a more accurate financial picture. If your organization is of a size that you are required to have an audited financial statement, you're already doing this. It's required for audited financial statements. It is more complex. It does require more detailed tracking. Neither of these is good or bad. The right choice is going to depend on your size and your reporting needs and just really your organizational needs. So I'm going to give an example to kind of illustrate the difference of how the two would be handled. The example is you've got a grant that you received the award letter in March. Your funder is telling you, we're going to give you money. Your expenses for that grant are incurred in April. And then the cash for the grant is received in June. So under cash accounting, the expenses would probably be reflected in April. If you were paying for them as you go in April. And the grant isn't going to be reflected till June when the cash arrives. So in this scenario, you don't have anything, I mean, unless maybe you're keeping a list or whatever, but there's nothing in your financial statements or in your accounting that is telling you who owes you money. So it's easy for things to get missed. On the other hand, accrual accounting, each component is going to be reflected in your accounting when it happens. So, for example, in this example, when the grant letter comes in March, you would record it as income in March and with a receivable due. When the expenses are incurred, if they're paid for, they would be an expense and it would come out of your cash. Or maybe if it's something that you owe money for, it would be an expense and would be reflected in your accounts payable. And then in June, when the cash comes in, it would pay off that receivable that you have open in your accounting. Just some other examples of where things would be different with cash versus accrual accounting. Just a couple of other quick examples. Um, Say the end of your fiscal year is June 30th, and you have a staff member who works the last week of June but doesn't get paid until the beginning of July. Under cash accounting, that expense would be recorded in July, even though the work was done in June and theoretically belongs to that fiscal year ending in June. But if you're using accrual accounting, you would book the expense in June and then it would just be offset by the cash payment in July. Another one is deferred income for a program, or I mean, an example as a theater person, an example that I like to use is, a lot of theaters are selling their subscriptions months ahead of when the performances are happening. And under cash accounting, they'd be recording that income when it comes in, or that cash, I should say, when it comes in. Which, could be any time. But under accrual accounting, you would book you would receive the cash, but you would record it as deferred and it wouldn't show up as income for your organization until when the performances happen, probably in the next fiscal year. All right. So next, we have managing restricted funds. So restricted versus unrestricted funds. I put at the bottom, only the donor can restrict. It is one of the principles of Arts FMS. That is her favorite phrase. We say that is going to be the title of her when she writes a book. That's going to be the title of her book. Only the donor can restrict. Restrictions can only come from donors or grant agreements and always have to be honored, regardless of cash needs. So a grant without donor restriction can be used for general operations. Somebody gives to your annual fund, somebody says just generally here's a donation to your organization. That is without donor restriction and general. Donations with donor restriction there are two components to them. One is a gift that is temporarily restricted, and that means it has a time or a purpose restriction. The other one could be a permanently restricted gift, which is commonly known as endowment. So a couple of examples of restrictions. So a foundation awards a grant for a computer system. That's a restriction. And it can only be spent for expenses. It can only be used for expenses related to that. A foundation awards a grant, a $60,000 grant over 3 years for general operating support. That is still a grant with a restriction because it's meant to be spent in 3 years. So it can be used for general operating in each of those 3 years, but it can't all be spent in 1 year. Somebody gives money to pay for students to participate in a camp, restricted. And then this final one is an example of an endowment. Somebody gives $100,000 to provide scholarships in perpetuity, and the proceeds are coming from interest and investment earnings. That's an endowment where the expectation is the organization is going to invest the money that's given. That initial gift, $100,000, that initial gift, the intention is that you are not spending any of that $100,000, but that you're investing it. And there are federal laws about it. New York has its own set of laws about endowments. about the prudence of investments and how you're supposed to do that. But you can spend a portion of the earnings on those investments each year for that restricted purpose. So, some common mistakes and some best practices about restricted and unrestricted funds. Um, obviously spending funds incorrectly would be a problem. Typically, with a restricted fund, a donor is going to want to report, and you need to be able to report on that. Um, for anybody who maybe isn't familiar with restricted funds, it is not uncommon for a donation of restricted funds to include um, some funds for covering overheads. So there are legitimate ways to use restricted funds on more than just the very direct expenses related. That is not uncommon. Um, Mixing restricted and unrestricted cash. So not necessarily a mistake and not necessarily an issue, but potentially one. And I'm going to show this is where we're going to come back to those financial statements. I'm going to show some examples of how you can keep track of your restricted funds, even if they are commingled in the same bank account. Let's see. All right. So best practices, making sure that you're tracking your restrictions and regularly reviewing what what your cash balances are and what you have available. So here are a couple of examples of how you can do that. So this first one is just a simple spreadsheet of tracking any restricted funds that you might have. Um, Using a tracking sheet where you list your donor name, what the purpose is of the gift that was given, and then tracking typically for a fiscal year. You would start with your beginning balance at the beginning of the fiscal year. In the first example of a $5,000 gift to support a specific program, there wasn't a balance at the beginning of the year. This is a gift that came in during whatever year we're looking at. You have a column for additions where you add that $5,000. At the end of the year, maybe it's maybe you haven't spent it yet, or at the end of the period that we're discussing. Maybe this is in the middle of the year. You haven't spent it yet, so your ending balance is $5,000. And then maybe you're also tracking here whether or not those funds are still receivable, whether you have actually received the cash. In the case of what I put in here, you've received half the cash, but there's still $2,500 outstanding. And I'll show you where that can be useful on one of the next slides. The other example is an individual donor gave $30,000 for a period of 3 years. So in this case, it was from FY25, which is a past fiscal year in this scenario, through FY27. So at the beginning of the year, you'd already used $10,000. You're starting with 20. You're releasing 10,000 of it into operating for the year, and then you're ending with $10,000, still restricted to next year, to FY27. And none of it's receivable. They gave you all the cash already. So how do we look at it and keep track of what that means in terms of the bank account? Here's where we come back to these two statements. And like I said at the beginning, these examples are sort of, what it would look like if you opened up an audit. But it's also possible, if you have if you're running financial reports, that you can break this out and create these two columns. Most financial accounting systems would run you an income statement like this with just basically that total column. But you can take that total and break it out into these two columns so that you understand what your restricted funds are. So in this case, you can see um, in this example, there was $20,000 released from restriction into operating, which is the without donor restrictions column in this particular year. Leaving, and so on that previous slide, you would see at the end the total would be the $40,000 of what you have left in restriction. And then more to a certain extent, more importantly for day-to-day operations, you can see on this one, the donor restrictions column shows how much of the cash is restricted. So even if you had a single bank account with that $64,000 balance that's in the total column, with this report, you would know how much of it is without restriction and how much of it is with restriction. And this is something that I'm working on with one of my clients right now who has some restricted funds and has some low bank balances. And it helps us understand that, yeah, at the moment they probably are spending some of those restricted funds when they haven't actually done the programming yet. Which, as long as you know and you plan, there's no rule that says you can't, unless the donor specifically says that the cash needs to be segregated into a separate account and cannot be touched, which most of them do not. There's no rule that says that you cannot use it for cash flow purposes, but obviously you need to be aware of it. You need to make sure that you have it available when the time comes to provide the services or the programming that you committed to for the grant. Um, Let me just see if I had anything else I wanted to say. These reports, breaking things out into two columns like this, can also be useful for helping for internal reporting, for board reporting, helping, any stakeholders understand what's available for future use, what you might have for use in the next year. All right. So then taking that into cash flow. So cash flow is obviously a really common challenge for probably most nonprofits right now. I think I see a lot of my clients, have set fixed monthly expenses and uneven and unpredictable fundraising and limited reserves. And it creates a crunch and it creates stress and anxiety. Um, and, many organizations can be financially healthy, but cash poor. So it's important to be realistic, understand timing, and possibly set up a cash flow, even a very simple cash flow spreadsheet to help you understand where things stand. I have one actually, larger client who's dealing with a lot of cash issues, and I had a moment about a year ago, up until maybe 6 months ago, that I was keeping daily cash tracking. Um, just so I could understand where we were and when we might hit a rough spot. We've now gone to weekly tracking. So a simple spreadsheet can just really help improve cash flow visibility. So I apologize that this is probably a little bit hard to read, but let me just talk a little bit about what we're looking at here. This doesn't reflect a whole year, but this is a monthly cash flow spreadsheet. It can be helpful if you're setting it up for your whole year to put a budget column in there so that you can keep track of whether your including everything that you've budgeted, or whether there are things that you haven't identified, particularly with contributed income. In this case, the budget for foundations, for example, is $300,000, and maybe only that 100 that's on there is identified, and the other 200 is still pending. So that's an important thing to know for your cash flow, and maybe you put that out towards the end of the year, um, so that you can kind of keep track of what's really going to happen in the more immediate months. So basically, you're just laying out in this sheet by month. You've got your cash, your beginning cash balance at the top, so from your bank statement, and then putting in what you're projecting or what has come in when you're actualizing it for your contributed income, for your earned income, and then your expenses. And you can go as detailed or as simple as you want. If there are bigger lines like salaries or rent or particular program expenses that you want to be more specific about, you can create more lines to track what you anticipate what cash is actually going to go out the door, as opposed to here's where we get into a little bit of the difference between cash accounting and accrual accounting. So it's the actual cash going out as opposed to when maybe you get an invoice. Um, There can also be some adjustments that happen on your balance sheet. Like, for example, if you have a credit card that you're using for expenses, the cash action is actually the paying of the bill, right? Not the actual expenses that you charge to the card. So it might be more helpful to put that down below on the credit card line. And then at the end of it, it should come to what your cash balance is. When you're actualizing it, it should tie out to what your actual ending balance is at the end of the month in your bank account. Um, so, like I said, this can be a really useful exercise, um, or even just if you're like me, where worrying about the bank balance keeps you awake at night, at least to help you sleep at night, to know that you've put it down on paper and to the best of your ability, you have a sense of where you might run into a cash issue. And then you can not during the middle of the night figure out how to address it. I know that is helpful to me sometimes with my clients when I worry about if we're gonna bounce a check. All right. So finally, QuickBooks. So, uh, why use it? I think for smaller nonprofits and even medium size, I didn't use it until I came to Arts FMS, and I mean, it has its struggles, but I haven't found a single accounting system that's perfect. It is it's fairly intuitive. It's pretty easy to use, and can really help with supporting your tracking and planning and reporting needs. It has modules for paying people, for receiving money, tracking, easily running reports for your payables so that you know what is outstanding that you owe, for tracking your receivables, what people owe you. Um, if you wanted it to, it can help you manage your restricted funds, and easily generate reports, those income statements and balance sheets that I showed earlier. It won't do the without and with restriction, but it'll give you a report with that total column with each of your income and expense lines so that you can get a snapshot of what your financial position is. There is, for anybody who's not familiar, there's an organization called TechSoup, and I put the website on here, there is a discounted QuickBooks version available on TechSoup. I want to say it's like $70 a year. It's very inexpensive. Um, and TechSoup has discounts on lots of I get this is just my personal recommendation. No ad here. Um, there is a they offer discounted products, lots of products, Dropbox, Zoom. Maybe they don't do Zoom anymore. Um, but they offer lots of different discounts on various platforms and software and whatnot. Um, so just to wrap it all up, build simple routines, review your reports regularly. The numbers are important. The trends tell a story. Looking at your year over year or at your cash flow will help you kind of get an idea of where you're headed. And the more, if you feel uncertain or anxious about any of the finance things, the more time you spend just kind of touching it, the easier it'll get. And there are lots of great resources out there on the internet. I had on those slides with the financial reports, I put a credit to where I got it from, and that's a really great platform to look at some financial information um, for nonprofits. And that's all I have. Questions?
Jessica, thank you. This is so incredibly insightful and helpful. I actually, oh, I see some questions already popping into here, so I will read them out to you. The first one was, what is the website you just referenced? I'm pretty sure that was TechSoup. Yes?
I was talking about TechSoup, and then I actually I referenced the other. Hold on, I'm just gonna like click back for a second here.
Please. We'll go back to the scan. Don't, if it's okay if you missed it.
Yeah, hold on. I want to go back so I can remember what not Propel Nonprofits. That's the other one that I think that maybe you're asking about. Propel Nonprofits. Um, I don't have the actual website uh, off the
Yes,
top of my
thank you.
head,
That
but
was it.
okay, great. Yeah, Propel Nonprofits. They have lots of great resources.
And if any of you are not familiar with TechSoup, it is a phenomenal resource. I recently got completely free online versions of entire Microsoft Office for an organization. It's a little bit of you have to jump through a couple hoops just to prove you are who you say you are and all of that. So and they're connected, I believe, with Candid so that they verify your organization. But highly recommend it. All right, Daniel Brooks asks, we are just starting up and have a budget of below 12,000 annual budget. We are a volunteer run and have uncertain income and cash flow. We found an open source accounting program called GNU Cash that is free and hence cheaper than QuickBooks Online. And I had a similar question. If 70 bucks is too much, which for some organizations it is, or they're already in a system, are there systems that you would say you absolutely that are the wrong way to go? Or there's some that you're like, oh, we've tried to use this, it just does not work for nonprofits.
Yeah, I have not had any experience with any others, unfortunately. And I think I'm not sure that there's anything cheaper than that QuickBooks. Well, no, sorry. Let me rephrase that. Um, I think there are some other uh, less expensive programs, not less than that $70 that I'm familiar with, but that nonprofits might use that I know are not great, but they're more than that $70. And I'm not, to be honest, I don't remember whether $70 was the right number, but it should be close to that.
And that
Um,
your memory is $70 a year or a month?
a year.
Yeah,
Yeah, on TechSoup. Um,
that sounds
uh,
about right.
yeah, I'm not familiar with anything that's uh, cheaper than that, unfortunately, for business.
Makes sense. Someone is asking advantages of QuickBooks over classic Quicken. Which should we use?
Yeah, I'm not. I haven't been in Classic Quicken in many, many years. I'm sorry. I imagine is Classic Quicken more for individuals, or maybe it's for small businesses too?
Peggy, if you want to come off of mute and tell us a bit more about it, please feel free. But Daniel is saying Quicken won't do invoices.
Oh, well, I mean, if that's part of the different, like if it's just a difference of some features and those features aren't important to you, then I bet that that's fine too. Yeah.
I'm having, oh, there, can you hear me?
Mm-hmm.
Can you hear me?
Yes.
Okay.
Yes.
Um, I kind of am wearing all the hats of my organization, which Washington Square Music Festival that provides free concerts. And our budget is growing, and I'm having difficulty keeping track of all of it. I shouldn't say all of it. We have an intern, and but it's basically I see I'm not doing as an effective job as I could, and I'm just wondering. I know a lot of people say that QuickBooks also is very good for sending out invoices and things like that. So I'm just wondering if, yeah, Quicken, now Daniel says Quicken won't do invoices. Well, I
Mm-hmm.
probably do, but I could use it for fundraising. So actually, nobody has an opinion about whether I'm very stubborn and resistant to change. But, I'm listening to you and I'm seeing I have a problem and this may be, helpful to solve it. So I have to think about it, I guess, a little bit more.
Yeah, I'd say take a look at what features, the difference between the two in features and what is important to you versus not important to you. And I think budget definitely matters. And if going back to what Daniel said, if you find something that is giving you what you need for the price point that works for you, then that's the right thing for you. If it's serving your purposes and helping you keep track of things, then that's the most important thing. Um,
It's
uh,
clunky. It's clunky writing reports.
yeah,
And this
yeah,
sounds like QuickBooks might be better at that.
it might be. One thing I do want to say about QuickBooks, though, is that if anybody does decide to try it, QuickBooks has a lot, and it's important to not get overwhelmed by it. I'll tell you that even in my like using it every single day, I'd say probably only touching a quarter of what it offers because I just set aside what I don't need from it. Um, so I'm using the payables and the receivables and maybe generating invoices. Things like that, and just hiding the rest so that it's not overwhelming. So I just do want to give that caveat.
And I'll give the caveat and my thinking when asked what database you should use for nonprofits as well. As Jessica said, they're never perfect, and I'm usually a big fan of using the one that you're actually going to use and the one
Mhm.
that you're comfortable with, because that is key. The one that makes sense in your own brain with your own logic model makes a lot of sense. You have a
Agree.
question from Marge saying, thank you so much for this workshop question. Double confirming, do all funders really understand that we will build in general operating costs? Most want projects and say they don't fund general operating costs, but if it's not the main purpose of the fund and only covering overhead, isn't it okay?
Um, oh gosh. Um, I I'm by nature an extremely rule following, risk averse person. And so from my perspective, I'm I I might not include overhead, but I'd be interested, Amy, I'd be interested to hear what you have to say about that from more about the like the fundraising side.
Absolutely. And this is a debate that I'm constantly having with CFOs, right? Here is my take on this is, first of all, this should not be on a grant by grant or a proposal by proposal basis. I think that fundraising and finance departments need to work together. The people who and whether you have a department or just individuals, I think you have to have, and this starts from your budgeting, it starts from, potentially even from the board level, an understanding of how you look at your budget and what is overhead and what isn't. In your annual audit, there is a page for functional expenses, and there is a calculation that goes with that. And my experience has been that when you talk to your auditor, I have always had auditors ask us as an organization, how do you break down those percentages? This
Mhm.
person, how much do they spend in fundraising, in admin versus in programming? And if there is a consistent understanding and a justification, meaning you've gone through, you've actually looked at someone's hours. And honestly, the easiest way I've found to do it, it's tedious, is have everyone track their hours for a month so that you can justify this is how much, and really get into the weeds. This is how much of my day I spend in fundraising versus programming
Mhm.
versus administration. And if you can justify that, then I do feel very comfortable that you start by having a conversation internally through administrative staff, bring that to the board to get their opinion as well, vet that, bring it to your bookkeeper, your accountant, if you're at the point that you are hiring one, and it is fair to say you need people to run programming, and people are sometimes considered overhead.
Mhm.
Um, Make sure that you are being fair to the organization. You can't run the program if your lights don't turn on, but you're not only turning your lights on for the programming. So if you can come up with a balance of all of that, that seems to be the place that you live on the seesaw. And I recommend you reassess that every year.
Mhm.
But try to be fair and honest both to what the funder wants to fund and what you realistically need to run the program. And
Yeah.
I have found most funders, especially these days, they're very much moving in the direction of wanting to fund a program and recognizing that a program needs the lights on, or whatever
Yeah.
that thing is, the overhead thing, to
I
function.
agree with all of that. And I think that, like, Amy, if you and I were sitting together to talk about a grant budget, and that I would say absolutely. And here's my calculations for those functional expenses. And yeah.
Right. Yvonne is asking, do we ever offer sessions on helping nonprofits learn to use QuickBooks? We haven't yet, but I love this kind of question.
Yeah.
Um, I may be texting Jessica afterwards to see if she wants to work on putting that together for us. And she's nodding, so I'm taking that as a yes. Y'all heard
Yeah.
it here first. So thank you. I like that suggestion, and it is something that we very much can look into doing. So thank you. We will look closer at that. That's a QuickBooks 101 how to. We will look into it. Potentially not this spring, potentially by next fall, but we can see what we can put on the calendar. Uh, yeah. Follow-up question. Do I need to hire an auditor? We're tiny and at the very early stages, just got our 501(c)(3, have a bookkeeper and a CPA already.
Yeah. So uh I you are not, if you're tiny and just getting started under New York State charity laws, you are not required to have an audit. I looked it up, and I think the New York State, Amy, if you know, and I'm wrong, tell me, but I think New York State is $1 million income for an audit, for a full audit. And then there's a step below that that's a review done by an auditor. But I think I would say like under $500,000, I don't know that there's anything required. Um,
Unless there's a funder that's requiring it. If a
yeah,
funder is asking for a review, that's a question, but then I would also look at how much does it cost to bring an auditor in versus how much is this funder giving you? It
yeah,
might
agree with
sometimes.
that. I do have at least one client who's sort of on the bubble of whether or not the audit is required, who has chosen to continue doing a full audit, because first of all, sometimes the price difference is not that big. And second of all, having a full audit, demonstrates a certain amount of, um, I don't know, the compliance and, whatever else. But if you're tiny and you have a very small budget and you're just getting started, it's not something that you need to do yet.
All right. I think that those are all of the questions. If you have more, you can feel free to reach out to us through nphd.org, fill out the form. We can connect you. We actually have someone on our staff who does specifically focus on budgets, could hold your hand through some QuickBooks planning. If you needed that with some real urgency, we can work on that for you. But either way, feel free to scan this QR code. We do want your feedback. We want you to suggest topics for us. It's incredibly helpful. And thank you, Jessica. We really appreciate it.
You're very welcome. Thank you all. So glad to see you today.
Thanks,
Thank you,
everyone.
guys.